a study on comparative analysis of various schemes of mutual funds with special reference to ITI Financial Service at Chennai. Submitted by Manigandan B. WAM number 978, register number MA20493, under the guidance of Mr. M. Prakash, Assistant Professor of Management of Study, Veltech Ranga Sangha Arts College, applied to the University of Madras, April 2014. Introduction. Mutual fund. A mutual fund is a body of corporate registered with SEBI that pools money from the individual's corporate investment. The sum in a variety of different financial instruments or securities such as equity shares, government securities, bonds, debentures, etc. Definition. Mutual funds are collective saving and investment whereof a small are pooled together to invest for the mutual benefits and returns distributed by professionally. Concept of mutual fund. Mutual fund is a trust that pools the saving of the number of investors who are a common financial goal. The gold thus collected is then invested in capital market instruments such as shares, debentures and other securities. Role of a mutual fund. The primary role of the assistant investment in earning an income or building their wealth by participating in the opportunity available in various securities and markets. It is possible for funds to structure a scheme for any kind of investment objectives. Thus, the mutual fund structure through its various schemes make it possible to tap a large corpus of money from diverse investors. Company profile. The company ITIFSL is emerging as one of the topmost wealth management companies in India, with a presence in over 120 branches across the country. ITIFSL, originally promoted by the Investment Trust of India, it's now part of the Sarians Group. The Sarians Group has improved the portfolio of business under its fold, which mainly all under the real estate and financial service categories. The promoting the subsidiaries of this group are a Preborn Heyman, country largest debt broking companies. A time the Spectrum Commodities Private Limited, ITI Securities Limited, formerly known as the Instrument Spectrum Securities Limited, ITI Capital Holding Private Limited, ITI Wealth Management Private Limited, ITAI Investment Advisor Service Private Limited. Products and service offered by ITI Financial Service: mutual fund, insurance, fixed deposits, currency, NRI service, portfolio management, IPOs, equities, BSE and NSE, F&O, commodities, MCX, NCD, EX, currency, NSE, CDS, MCX, NSX. Industry profile. Financial service. Definition. Financial service is a regulation created by the banks, insurance companies, investment banks and brokings, and describe the industry in which the companies providing all those services are fully interpreted those terms across around the because of the U.S. Graham-Lanch-Bailey Act of the late 1990s, which has allowed those companies to merge. Critics say this is a term which has attempt to make the unison of those operation sound nature, ignoring the possible problem from the company them, such as the monopolism. The history of financial service. The term financial service became the more prevalent in the United States, partly as a result of the German Lanch-Bailey Act of the late 1990s, which enabled different type of the companies operating this U.S. financial service industry at the time of to merge. Company usually have two distinct opportunities of this new type of the business. One approach would the bank, which is simply buyers in insurance company, or investment banks keep the original brands of the acquired from the hats. USA. The accusation to the holding the company simply to the deliver the earning. Outside the USA, non-financial service companies promoted within the holding companies. In this scenarios, each company still looks independent and has to own customer, etc. In this other style of a bank would simply created its own broking division or in insurance division and attempt to sell those products. It is the own exiting customer with incentive for combining all those things with the one companies. Objectives of the study. Primary objectives: a study on comparative analysis of various schemes of mutual funds with special reference to IT financial service. Secondary objectives: to analyze the best schemes in mutual fund through comparative study of various funds schemes in mutual funds. To analyze the risk returns of the mutual fund schemes. To analyze the betterment choosing the asset management companies. To suggest suitable measure for the investor to prepare the mutual funds. Scope of this project: a mutual fund is the most suitable investment for the common man, as it is offered an opportunity to in a diversified, professionally managed basket of the securities at a relative low cost. The funds are selected with or prepared by the customer of various organizations. The categories and selected on evaluating the performance of the relative risk. The scope of the project is mainly conquered on the different categories of mutual funds such as equity schemes, debt schemes, income schemes, growth schemes, balanced fund, liquidity funds schemes, and tax server funds. The aim of the study is to the guide of the investment, hold the investment in the mutual funds or other investment they make in the stock market and try to suggest them which are the best one. Need of the study. A study is the first three is to understand the combination of the selected funds which determine the scope of the performance of the funds, followed by the USA ratios and relevant qualifying and understanding the risk and returns relationship for each mutual fund schemes under the consideration. Then a comparative analysis of the mutual fund schemes is done to see the which fund has performed the best. The study is subjects signification or to the companies as it looks to the minute details the different of the performance of the funds. The different companies are same then sector under the similar market condition. This would help the companies to develop. Limitation of the study. The study also has some limitation which are the follows. The time is the important considered to the limited period of the time is spent to the studies. The study is restricted to the secondary desert only. Not possible to get full information because they are business secrets. Comparative analysis of mutual funds restricted only on the selected companies. Review of literature. The present study details with the review of literature evaluating the performance of Indian mutual fund schemes. A number of studies of evaluating the performance of Indian mutual funds schemes has been conducted in India and foreign countries. Review of the sum of the studies in present in the following decision. Jaidev 1996 evaluated the performance of two growth-oriented mutual funds, namely Master Gain and Magnums, expressed by the using the monthly returns. Johnson, Sharps, and Tanner measures have been applied in the study and the pointed out of the according to Johnson and Tanner measure. Master Gain have the performed better. The performance of the Magnum was poor according to all the three measures. Alpha and Rafio 2009 is the study of open-end Pakistani mutual funds performed using the quarterly data for the period of 1996 to 2006. The study measured the fund performance by using the Sharpe ratio with the help of full time series and cross the sectionally data and also focused on the different attributes such as a fund size, expense, ages, turnover, and liquidities. The result found signifying the impact on the fund performance. Research methodology and systematic way through which the particular case or problem can be solved efficiently. It is a step-by-step process, logical process which involves defining a problem, laying the objectives of research, source of data, method of data collection, tabulation of the data, data analysis and processing, conclusion and recommendations. Data collection. The task of the data collection being after a research problem as defined and research design plan checked out. While deciding about the method of data collection to be used for the study, major portion of the project involves secondary data source and minor portfolio involves primary data source through interaction with expert in mutual funds, secondary data source through internet, various official sites of the company, through pamphlets and brochures of the companies, journals and magazines, through unpublished materials also. Sample profile. The sample required for the study has been selected through the random sampling methods from the available list of the mutual fund schemes in the market. Broadly, the sample of 9 mutual fund schemes include equity funds, debt funds and balanced funds. The study has taken the 3 broad categories of funds: equity funds, debt funds, balanced funds. Equity funds: HDFC equity funds growth option, ICICI Prudential Dynamic regular plan growth, Sundaram equity plus growth options. Debt fund, HDFC income funds growth, ICICI Prudential income regular plan growth, Sundaram money funds direct plan growth option. Balanced fund, HDFC balanced fund growth option, ICICI Prudential funds regular plan growth, Sundaram balanced funds direct plan growth. NATV, the net asset value of the funds in the cumulative market value of the asset funds, net of the it is liabilities, in other words, in of the funds disclosed or liquidities by the selling of all the assets and funds. This is the amount of the shareholders who are collective own. This gives rid of the concept of the net asset value per unit, which is the value represented by the ownership of the one unit in the funds. It is a collective simply by dividing the net asset value of the funds by number of units. However, most people refer loosely of the NAV per unit NAV, ignoring the per unit, which also able by the some convention. Tools and methods. Beta. It is describe the relationship between the stock returns, the best value of the interpreted in the following manner. 1% change in Nifty index would cases a 1.04 to beta changes of the particular funds. It is the slope of the characters of integration lines. Its signification that which is the beta of more than 1 will be raised more than market and also fall more than market. Thus, if one likes to beta that market one of the upside, it is the best to invest in the high beta funds. But one of the most keep in the mind of such a fund will be also fall more than market on the way up down. So over the cycle returns may not be much higher than the market. Similarly, a low of funds will rise than market the way up the and lose less on the way up down. When safely the investment important the fund beta is less than 1, the product returns the better of market falls. Beta n summation xy minus summation x bracket summation y. Alpha. It is indicates that the stock returns are independent of the market returns. If the portfolio is well diversified, the alpha value would turn out be the 0. The interpreted of the characters recognition line in the alpha. Alpha shows whether the particular funds of the product returns justifying the risk it is taking by the comparing the actual returns of the one of them participated by the beta. Alpha can be seen the measure of a fund manager performance. This is the fund as the earned the over about the what is the was expert to the earn. Thus this the value added by the fund manager investment decision in the track the index professionally on the alpha of the 0. Those possible funds as the alpha of 0 and active funds. Alpha it is a measure of that fund manager activities as they contributed by the funds returns. One of the whole possible alpha is that fund performed better the expert giving the level of the risk. So higher the alpha, better the returns. Alpha equal y minus beta x. correlation of coefficient. It is measured by the nature and extent of the relation between the stock market index returns and returns in particular period. R equal to n summation xy minus summation x bracket summation y divided by root n summation x square minus summation x whole square root n summation y square minus summation y square. Coefficient of determination, the square of the correlation of the coefficient of determination. It is given by the percentage variance of stock returns explained by the variance in the market returns. R square. Taryan ratio. The Taryan ratio, named after the Jacques L. Taryan, one of the father of the modern portfolio theories, helps analyze returns in relation to the market risk of the funds. The ratio, also known as the reward and the volatility ratio, provides the measure of the performance. Adjust the measure risk higher than the Taryan ratio, the better the performance under the analysis. It is the ratio that helps the portfolio manager determine the excess return generate of the difference between the funds returns and the risk-free returns. The excess returns to the beta ratio measured and the additional returns of fund unit systematic risk ranking of the funds done based on the ratio. T equal to R minus RFR divided by beta. Sharpe ratio. Sharpe ratio is similarly to Taryan ratio, the difference being the instead of the beta R we take standard deviation. A standard deviation referenced by the total risk experienced by the funds. It reflects to the return generated by the undertaking all the possible risks. A higher Sharpe ratio is better as the reference the higher returns generated per the unit of the risk. S equal to R minus R FR divided by alpha. Returns. Returns is measurement of the how much of investment in increase or the decrease of the value of over again the given the period. In particular, an annual returns is percentage of which has increased displayed over the any 12 periods. R equal to P1 minus P0 divided by P0. Means. The means average is a quick mathematically measure of the number of data points of the unit. It will be you important information about the of data of your business. The almost summary of the data our subjects. Mean equals sum of the x values divided by n number of the values. Standard deviation, the degree of that the single value of the group of value varies from the means of the distribution. Standard deviation are statistically measure that use past performance of the investment or portfolio, determining the potential range of the future performance and as to the probability of the performance. Standard deviation can be calculated for the individual securities for the entire the portfolio. S equal to root summation x minus m whole square divided by n minus 1. Variance and standard deviation squares. Jensen ratio, the risk adjusted performance measured the reference by the average returns on the portfolio over and above the particular by the capital assets pricing the model given the portfolio beta and average market return. This is the portfolio is alpha and fact the concept sometimes referred to the Jensen ratio alpha divided by beta. Findings. Sharpe. The idea of the Sharpe ratio is to see how much additional returns where are they receiving the additional holding the risk over the risk-free assets higher the better. This is such as the case no form the best all categories equity ICICI Prudential Dynamic Plan the higher Sharpe ratio which has the debt and balance in ICICI from perspective. Hence it is necessary of the companies to be with all the sectors. I have chosen the 3 companies. There are schemes had made the analysis of the 3 into 3 ways. Taryan ratio. The Taryan ratio related excess returns over the risk-free returns to additional risk taken. However, systematic risk used instead of the total risk. The higher the Taryan ratio, the better the performance of the portfolio under the analysis. ICICI Prudential Dynamic Plans is the best of the Taryan ratio. Although as the ratio equity segment and it is better the debt balance it portfolios that have the additional risk taken by the turned positive and as yield excess returns. Jensen ratio is used determination abnormal returns of the securities portfolio of the securities over the theoretical returns. Sundaram Mani's fund good performance in the cases Jensen ratio. Wherever the equity schemes ICICI Prudential Dynamic Plans for deviation. Standard deviation show how much attributed in the distribution except from the average. Yeah, also standard deviation indicate the data point then very closely. The means the high standard deviation indicate the point of the speed out of the over large values. Here is case above the able the HDFC equity funds are so large is the expert value of Sundaram money fixed exit from the means show the close of the expert value. Hence it can be considered in all categories. Projection. The study as a third pro the measure returns of a fund or the past performance is not good enough. They make sound decision of on investment for the future. There is need to the understand various available tools of the comparative analysis and there are significant it's making investment decision. The tools help to analyze in the context of the performance of the funds over the period time. Those will giving the suggestion to the potential investor in investment. Conclusion. It is found of the comparative study of companies based on the also my feeling findings also part of the some are the no forms is good everyone's schemes. This because of the working of the AMC. Every AMC differed with their ideas of way of the holding the portfolio consider. It those low performing mutual funds have to be picked under the simulation the best performing funds and also brought and put in portfolio avoid losses. The investment have to analyze the market moving and sustain the fundamentals and advice to the investment are not to depend on this about the market. It is necessary to find expert the potential knowledge on AMC. Sign is the unlimited decide the portfolio measure. It is also into the investor in though have the keep the sum match the receive of the buy good on the funds whenever the records. HDFC companies perform the better in equity schemes. It is the not good of the depth and balance schemes. Hence it is be picked to the picked out of the replaced by the other funds. Bibliography books. Security analysis of the portfolio management by Punithavali Pandian. Website www.ampindia.com, moneycontrol.com, nifty.yahoo.financial.com, mutualfunds.com, navindia.com, hdfcfunds.com, icprudential.com, valueresearchonline.com, economic times and indiatimes.com. Journals. IRJC International Journal of Marketing, Financial Service and Management Service, Volume 1, Issue 7, July 2012, ISSN 22777622, Magazine, Mutual Funds Year Report. Thank you.